Welcome back to Morning Markets on Thursday, the 25th of March. George Bell here, investment analyst, to bring you up to date on the key market moves over the last 24 hours. Turning first to equity markets, a mixed trading session on a regional basis. FTSE 100 was up 0.2%. Mid-cap and small-cap were stronger, posting returns of 33 basis points and 61 basis points, led by communication and energy sectors. The latter was really driven by the moves in oil price, with Brent crude increasing 6% on the day after a large container ship ran aground in the Suez Canal, halting energy supply chains. Across in Europe, the Euro Stoxx 50 was more moderated, up 0.14%, energy providing support on the day, but at index level, relatively flat given the anticipation of tighter activity restrictions. In the US, strong business activity and sentiment data drove the outperformance of the more cyclical areas of the market, reversing much of the trend direction which we've experienced so far this week. At headline level, the S&P 500 was off around 55 basis points. Within the index, the winning sectors on the day were energy, industrials, materials and financials. Just to highlight that sector rotation, the Nasdaq, which is more tech-focused, posted returns of negative 2% on the day. Across in Asia, looking at China and Hong Kong indices, relatively flat overnight. The CSI 300 down about 5 basis points, Hang Seng down about 6 basis points. Japan retracing some of the week's loss, posting returns of 1.14% as investors' appetite returned to more cyclically linked regions. Calmer day in bond markets overall, UK 10-year and 30-year gilts closing down the day around 0.5 basis points lower, 0.7 basis points lower, to levels of 0.75% and 1.27%. US Treasuries off similar levels, around 0.8 basis points and 0.9 basis points, to levels of 1.61% and 2.31% on the 10 and 30 year. After markets really took a bit of reassurance from Powell's comments to Congress around his confidence in the US economy at this point, implied volatility within the bond markets more suppressed, with the MOVE index pulling in from an index level of 70 to 60 over the last 5 trading sessions. US dollar trading slightly stronger on the day, up 0.2% against a basket of foreign currencies. Sterling trading slightly weaker at 1.369 against the US dollar, down from 1.375 on the day. Just turning to the PMI data, yesterday was a big day for flash PMI report, and it's called flash because it includes about 90% of the sample. PMI standing for Purchasing Managers Index. This is a leading measure given a sense of prevailing economic trends in private sector for manufacturing and servicing industries. A reading above 50 generally indicates an expansion or improving expectations for new orders, for output, for exports, for employment, and so on. Just turning first to Japan, and Jeff touched on the readings from Japan in yesterday's videos, which really demonstrated continued strength within the manufacturing sector, with the reading showing improvement month on month, up from 51.4 to 52 in February. The service sector still facing challenges regarding activity restrictions under the state of national emergency, which Japan was placed under at the time of observation. The service readings still sitting below 50, but showing signs of improved optimism, increasing from 46.3 to 46.5 as service sector firms gain greater confidence in taking on additional labour. If we just compare that to some of the other regions, we had data yesterday from the Eurozone. The composite measure provides an indication of both manufacturing and service sectors, purchaser managers' expectations, and over the month we saw a sharp acceleration, shifting the index above 50 from 48.8 to 52.5. So that's an 8-month high for that index. Breaking down those two component parts, similar to Japan, it's a manufacturing side which is showing the robustness, a lot of this driven by Germany, with the Eurozone index still sitting at 62.4, up from 57.9 over the month. Services showing improvement, but still below that level of 50 at 48.8, but that's improved from 45.7 over the month. What's noticeable is the rise in input costs, which are reported within the manufacturing sector, seeing the biggest rise in input costs in 10 years, reflecting the utilisation of supply chains given the demand which we are seeing pulling through, which will start to factor through into those inflationary expectations. Across in the US, still expansive, but the composite index did come down from 59.5 to 59.1 over the month. Looking at the two sides of the index, unlike what we experienced in Japan and Europe, the service sector, which is seasonally adjusted, demonstrated continued strength, with the reading above at an 80-month high, up from 59.8 to 60 as new business orders really ramped up and activity restrictions start to ease there. Manufacturing data demonstrated strength, up from 58.6 to 59, but it was the manufacturing output index which is experiencing challenges, falling from 57.8 to 54.5. Within supply chains, the manufacturers are experiencing challenges of fulfilling all orders, which is putting pressure on input costs overall. Both manufacturing and service managers did express greater confidence in the economic recovery. This was signalled through their commitment to taking on additional workers. We can see this relationship on screen now. The first chart highlighting the strength of the manufacturing across the three regions, all above that line of 50, which demonstrates expansion. The second showing the recovery which we've seen since March, but challenges still faced in the service sectors, with Eurozone and Japan still sitting below that level of 50 relative to the US there. Just a few things to look out for today. Treasury bill auctions in the US. We've got 7-year maturity auctions. Interesting, as we had the 5-year auction yesterday, was where demand was greater than initially expected. The Treasury Department was essentially able to offload around $61 billion of 5-year notes at a yield of 0.85%. This demand is reassuring after the lack of appetite for bonds sparked a significant move in yields last month. We'll also see US jobless claims data and inflation data for Japan. Thank you for watching.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.